Hello and welcome to the Business Environment Unit. This is Yasser Gulfroz, and today we will discuss learning outcome one of Business Environment Unit, understand different types of legal business ownership. So before I move further, uh, if there is anyone, can you guys see my screen? Can you hear my voice? Please do let me know if there is any issue. So let's get started. This lecture aims to help learners understand the broader business environment, particularly uh, focusing on legal business ownership. Unit aim to expand on financial accounting concepts and delve into the diverse business environment. It specifically explores various legal forms of business ownership, considering the needs of different stakeholders and their impact on decision making. Ethics in accounting and businesses are also discussed, highlighting their influence on business decisions. Before I move further, if there is any question, you can ask any question, any concerns. Okay, so indicative content. Uh, we will discuss type of organizations, including private, public, government, voluntarily, and charitable. Uh, Also, purpose, including profit, growth, return on investment, sales, sector, then stakeholders. We will also discuss financial, corporate, social, ethical, and environmental objectives. Also, we will talk about potential conflicts, highlighting potential conflicts between objectives of different stakeholders, organizational responsibilities, types of business activities, primary raw material extractions, secondary manufacturing, and tertiary services, sections of operations, private, public, and third sections, voluntary or non-profit. All right, so describe different forms of legal business ownership. Any idea if anyone can tell me or can explain if anyone's there? Okay, it is usual for new, enterprises to operate as a sole trader. So sole traders, because this type of business structure requires very little initial setup and management, the owner of the company is responsible for informing HMRC. However, registration and company's house is not required due to the fact that the kind of business is not considered to be a legal entity in its own rights. The owner of the firm is accountable for any and all debts and legal actions that may be brought against them. Therefore, the personal risk that is connected with the type of business may function as an incentive to register as a limited company, despite the fact that sole traders benefit from fewer laws and lower reporting obligations. So the liability is limited, quick and easy to use with less, filing responsibilities. Next is partnership. uh, when two or more people share ownership of a firm and contribute resources to the entity, the business is referred to as a partnership. The partner each receive a portion of the profits that are generated by the businesses. Within the context of general partnership, each partner is subject to unlimited liability. Creditors are not allowed to pursue the personal assets of limited partners in limited partnership to collect debts. Then next one is private limited company. As far as the law is concerned, a private limited company is a separate legal entity from the individuals who own it. So this is because the law recognized it as separate entity. When a limited company is in operations, the responsibility of the shareholders is restricted to the amount of money they have invested and any shares that have not been paid for. This is a significant advantage even if a limited business were to be dissolved, the personal assets of share would not be put at risk. So, sorry. The limited company structure is one of the most common type of business structure in the United Kingdom. This is because limited companies offer restricted liability, potential tax advantage, and the simplicity of running as a limited company following the incorporation of the company. Particulars concerning the filing history and the appointment that are now in effect are made available to the general public on the register maintained by Companies House. A level of transparency which is considered to be a key advantage when conducting business is made available to limited firms as a result of this. Requirement of forming a private limited company. It is required that at least one director be nominated who is older than 16 years old. It is required that the corporation have a registered office in the United Kingdom. In the order to be a compliance with government requirements, the company name must be during the process of incorporation. A minimum of one share must be distributed to shareholders. Any questions so far? Okay, so in a parallel, uh, in addition to their private counterparts, public limited companies are recognized as independent legal entities in their own rights. In addition, the member's liability is restricted to the amount of money that have invested and the money that their shares are worth. On the other hand, in contrast to private limited company, a public limited company allows its shares to be exchanged on the on the public market, which is frequently utilized for the purpose of raising capital. This structure is typically more suitable for larger businesses because the operating cost of public limited company are significantly higher than those of private corporation. A minimum of £50,000 worth of shares must be issued for a company to be eligible for a registration as public limited company. At least two directors must be selected in order to comply with the legal requirements. Any questions so far? Okay, limited liability partnership. So next one is limited liability partnership. Uh, in addition to being run in a manner that is uh, analogous to that of a conventional partnership, a limited uh, liability partnership also offer the advantage of limited liability. Limited liability partnership as a business structure that is valued in professions such as law and accounting, since its goals are typically driven by the pursuit of profit. So, as the designated member of a limited partnership, liability partnership, a minimum of two partnership partners are required to be appointed, and if it is these partners that are accountable for the day-to-day operations of the corporation. Our user-friendly software ensures that the formation process is uncomplicated, with your limited liability partnership being founded in an average of 3 working hours. Although the structure of an limited liability partnership is slightly more complicated than that of a limited liability partnership, the process is still straightforward. There is no corporation tax in a limited liability partnership, which is the primary distinctions between a limited liability company and a limited liability company in terms of taxation. As a member of fact, the members of limited liability partnership will be required to file an annual self-assessment and pay tax on their personal income. This means that they will be exempt from paying any tax that would have been necessary if they had been operating a limited companies by shares. Companies House and HMRC are the two places where annual accounts have to be submitted. Always having at least 2 chosen members is necessary for a limited liability partnership to continue to function. The designated members are the ones who makes the decisions for the company as a whole. So there are also the ones who are accountable for operating the business on a daily basis and ensuring that the accounts are submitted on time. Any questions so far? The key points in order to achieve the objectives of making a profit. The business is owned by partners. There must be a minimum of 2 authorized members. Partners are subject to limited liability. Members are required to pay tax on their personal income and requirements to, file accounts. A guarantee company. Any idea about guarantee company? If any can tell me, if anyone is there. Okay, so in short term, yes, in short term, by guarantee, firms are companies that are not for the purpose of making a profit. All of the revenue that are made are put back into the firm and they are used to accomplish the goals that the organizations had set for itself, which are frequently more benevolent in character. The members of this kind of corporations are not considered to be owners of the company. Rather than they are considered to be key decision makers. One of the legal entities that can be registered at company house is limited partnership, often known as LP of limited company. Uh, partners can be persons or corporate organizations that there are at least 2 of them involved in the business. There are 2 distinct categories of partners in a limited partnership, each of whom is responsible for a distinct set of functions and responsibilities. So each limited partnership is required to have a minimum of 1 general partners and 1 limited partner. Any questions so far? Okay, next one is limited partnership. It is possible for the partners to be situated in any country around the globe. Nevertheless, it is imperative that the partnership has a primary place of business within the United Kingdom. It is comparable to a firm based in the United Kingdom having a registered office. When compared to a general partnership, a limited partnership is distinguished by its official registration with Companies House, which sets it apart from the latter. Generally speaking, general partnership consists of 2 individuals working together under the same business name. One more distinctions between this and a limited responsibility partnership. Partners is that in an limited partners or LP, all of the partners do not have limited responsibility, whereas in an LLP, all of the members are protected from liability. The standards of for accounting and reporting that are imposed on a limited partnership are also distinct from those imposed on a limited liability partnership. A limited partnership is not required to submit a set of trading accounts to Companies House, whereas a limited liability partnership is required to submit a set of accounting accounts on an annual basis. Uh, all of the income that is generated by a limited partnership is reported to HMRC in the form of a partnership tax returns, while the personal income of the partners is recorded on self-assessment tax returns filed with HMRC. Any questions so far? Okay, so limited companies or limited partnerships have two types of partners, general partners and limited partners. So, a limited General partners are the individuals who are accountable for overseeing the day-to-day operations of the firm and direct their attention towards the management of the organizations due to the fact that the general partners have unlimited responsibility. It is possible to hold them accountable for the payment of obligations that are incurred by the limited partnership. In case of limited partnership, they make a contribution of a predetermined value, which may be in the form of cash or another form that is agreed upon throughout the incorporation process. The limited partners are granted limited liability up to the amount of capital that they have contributed to the partnership in exchange for making a predetermined contribution to the partnership. In exchange for making a predetermined contribution to in the event of any debts are placed against the partnership, they indicates that they will only lose the value that they contributed at the commencement of the partnership. In order to avoid losing their limited liability and being held accountable for the debts of the partnership uh, in the same manner that a general partners would be a limited partners must refrain from interfering in the day-to-day operating and management of the partnership. Any questions so far, if anyone is there? Okay, so anyone can explain term cooperative, if anyone is there? Okay, so a terms cooperative refers to a commercial organization that is owned by a group of individuals and is managed with the purpose of providing mutual benefits to those individuals. The individuals that are part of the group are referred to as members. So both incorporated and unincorporated cooperatives are valuable, visible options. The following are some examples of cooperatives. Cooperative for water and electricity, like utility, cooperative banking, credit unions, and housing cooperatives. Charity. Any comments? Any idea? In England and Wales, a charity is defined as an organization that is created solely for the purpose of charitable activities. Purpose of charitable activities and falls within the jurisdiction of the High Court charity legislation. So purpose are the goals that your charity is established to accomplish, that they are elucidated in the document that governs your organization. So in order to consider charitable, the objectives of your organizations must meet the given criteria. They must be within the scope of the definition of purpose. So they must be the benefit of the general public. Your charitable organization structure is established by a government documents, which is the legal instruments that establishes the charity and specifies the manners in which it should be managed. Uh, the type of structure that you select has an impact on the many aspects of your charity's operations, including but not limited to the following. Uh, Here, who will run it and whether it will have a wider membership, uh, if it will be able to enter into contracts or hire staff in its own name, and then whether the trustee will be personally liable for actions of the charity. There are four main types of charity structures. It is possible from a charitable incorporated organizations, a charitable business limited by guarantee, or a unincorporated associations with regard to trust. It is imperative that you select the appropriate form for your charitable organization, taking into considerations whether you require it to have a corporate structure or whether you desire to have a more extensive membership. Charity Commission of England and Wales is a government department that is not under the ministerial authority and is responsible for regulating registered charities in England and Wales. Additionally, it is responsible for maintaining the central register of charities. Discuss the different type of business activities and sectors of operations that business operates within. So there are three sectors in which enterprises operate, including the primary, secondary sectors, and the tertiary sector. So uh, primary sector is comprised of companies that harvest raw material from the land or sea, which are then prepared for utilizations by other industries. As an illustrations, Saudi or Aramco is the greatest oil producers in the world. So, and it generates up to $1 billion in revenue every single day. So in the secondary sector, raw material resources are transformed uh, into a product after being taken in by the primary sector. Pieces of metal, touch screens, bottles, or even clothes, and could fall into the category that this constructions industry, which is responsible for the productions of building, and a factory that manufactures a product are both included in category. Example of the would be the process of refining, which involves changing to cleaning up oil extractions before it is eventually sold at petrol stations. The last one is tertiary sector is responsible for selling finished goods and services of end users for profit. Both the Chinese fast food retailers, Manfadu and the South Korean department stores, Sega, which is the largest department stores in the world. So, are examples of businesses that operate in this industry. We can talk about, we can say McDonald's, KFC, uh, store chains like Primark, Marks and Spencers are also well-known, chain of department stores in the world. So there are also tertiary industries such as the tourist and entertainment industry as well. Type of business, service business, merchandising business. So one of three type of businesses is a service business, which is characterized by the provision of intangible items, which are products that do not possess a physical form. Service companies provide a variety of products and services, including professional experiences, advice, and other comparable offering. Some examples of the service businesses are saloons, repair shops, schools, banks, accounting firms, and law firms. Merchandising enterprises are another form of businesses that involves purchasing things at wholesale prices and then selling them at retail prices. So there are called buy and sell enterprises in the industry that are able to generate profit by selling and produce at prices that are higher than the cost of their acquisition. A merchandising company is one that sells a product without altering its physical appearance. So, some examples of some examples of retailers, including supermarkets, convenience stores, wholesalers, and other type of retailers. So manufacturing businesses, in contrast of merchandising businesses, manufacturing businesses purchase things with the goal of utilizing them as a raw material in the production of a new product. As a result, there is a change associated with the product that are purchased. Raw material, labor, and overhead costs are all components that are incorporated into the productions process of a manufacturing company. Following that, the manufacturing goods will be offered for sale to consumers. The term hybrid business refers to commercial enterprises that can be classed as belonging to more than one category of business. An example of this would be a restaurant combines components in order to prepare a delicious meal. Manufacturing sells a sparkling bottle of wine, merchandising, and fulfills the order of its customer services. Stakeholders, users of financial accounting, financial accounts. The financial information offers a copious amount of information that can be uh, a great assistance to a wide range of individuals that utilize financial information. Investors who are concerned about the risk and return associated with their investments are the ones affected by the issue. In order for them to determine whether or not they should continue to invest in a company, they require information. In addition to this, they need to be able to determine whether or not a company will be able to pay dividends, as well as evaluate the overall performance of the management of the company. Lenders, banks, and other financial organizations that provide loans to business needs to have information that assists them in determining whether or not the loans and interest will be paid back when they are due. In order to comprehend and evaluate the short-term liquidity of a business, creditors include suppliers and trade creditors require information that provide them with the necessary information will the company be able to meet its short-term debt obligations when they become due. Customers and debtors. Customers and trade debtors have a need for information regarding the capacity of the business to endure uh, and thrive. So the fact that they are client of the company's products means that they have a long-term interest in the variety of products and services that the company offers. There is a possibility that they are financially reliant on the company for particular goods or services. Any questions so far? Okay, so employees, there is a need for employees as well as organizations that represent them, such as trade union, to be provided with information regarding the stability and ongoing profitability of the firm. It is of the almost utmost importance that they have access to information regarding employment opportunities as well as the administration of a pension, funding, and retirement benefits. There is a good chance that they are likewise interested in the compensation and benefit that are offered to senior management. Governments, according to accounting information, is of great relevance to a multitude of government agencies and departments which are located in the government sector. So to assess the collect corporation tax, for instance, the government requires information about the profitability of business in order to conduct its operation. For the purpose of supporting decisions regarding takeovers and grants, for example, a number of regulatory authorities such as the Competition Commission and the Environment Agency requires information. Uh, Analysis who specialize in investments are important user group, particularly for companies that are listed on a stock exchange in order to conduct an analyze to the competitive performance of a company and the industry in which it operates that requires extremely extensive financial and other sort of information. A significant portion of this information is made available via the comprehensive accounting disclosure that are mandated by the London Stock Exchange. Uh, Nevertheless, analyses are typically provided with additional accounting information through official corporate briefings and interviews the majority of the time. So general public accounting information is also required by the general public, which includes interests groups. These interest groups are formed by various groups of individuals that have a specific interest in the operations and the performance of enterprises. Activities of the business: financing, investing, and operating. So, investing activities and financing activities are examples of activities that are fall within the category of the business activities. There are also activities that are not related to operations. So, the activities are considered to be operating activities, including include the manufacture, sales, and delivery of the company's product, in addition to the collective collection of money from the individuals. Uh, this may involves the acquisition of raw material, the construction of inventories, the promotion of the product, and the shipment of the product. Investing activities. Uh, Investing activities covers a wide range of activities such as the acquisition of sale of asset, which might include commodities such as land, building, equipment, and marketable securities. The provision of loans to suppliers or the receipt of payments from customers, payment connected to merger and acquisitions, and the receipts of dividends. Uh, Operations that are considered to be financing activities include the receipts of cash from investors as well as the distribution of cash to shareholders in the form of dividends when the firm creates income. The financing activities sections also include a listed of other actions that have an effect on the long-term obligations and equity of the organization. There are three types of operations. Activities of business include operating activities, investing activities, and financing activities. So there are three types of operations that make up the business operation: operating activities, investing activities, and financing activities. So the cash flow you can see here as well. Cash flow statement includes a listing of the cash flows that are utilized and generated by each of these business and activities. Uh, Cash flows that are utilized and generated by each of these businesses and activities. The cash flow from operating activities here as the first section of the statement providing information about cash flow. These activities include a number of things that are included on the income statements and the current sections of the balance sheet. So the activities that pertain of investing are located in the second section of the statement of cash flows. Here, investing activities, as you can see, proceeds from the sale of equipment 7,500 and dividend received 3,000. Net cash flows from investing activities 10,500. So these are commercial overdues endeavor endeavors that have been capitalized over a period of time that is longer than 1 year within the area. The acquisition of long-term assets is accounted for as a use of cash. The final components of the cash flow statement is comprised of operations related to financing, initial public offerings, secondary offers, and debts financing are all examples of these types of financing. Analyze the organizational responsibilities of an organization. If anyone is there, can you see my screen and hear my voice? Any issues? Okay, so a firm or company may be required to meet many duties which can be classified into social, environmental, financial, corporate, and ethical categories. Triple bottom line, TBL, the triple bottom line provides a means of approach. The triple bottom line is measurements that was first described by John Elkinston, a British business consultant in the year 1994. The concept of TBI acknowledges that stakeholders from the outside view it as the obligations of a corporation to go beyond merely producing money. In the event that the accumulation of rich causes harm to the environment or causes individuals to get ill, society will demand that the firms either change its practices or leaves the community. So all parties, including society, corporations, and governments, have come to the realizations that they must collaborate for the betterment of the community. When corporations are effective in financing in a society responsible manner, they will and should claim credit of their actions during those times. Numerous firms have the potential to ultimately result in the establishment of an economic system that is sustainable. Uh, this have been accomplished by operating in accordance with the TBL triple bottom line model and advocating its implementations. List of employment laws in the UK. Uh, if there are several employment legislation in the United Kingdom, such as Employment Right Act 1996, is a comprehensive statute that serves as an update to the earlier labor law. It covers the right of employees in various scenarios, including but not limited to dismissal, unjust dismissal, paternity leave, maternity leave, and redundancy. National Minimum Wage Act of 1998 is a piece of legislation that establishes the national minimum wage for both employees and businesses in the United Kingdom, keeping in the line with inflation and other factors. The government conducts frequent evaluations of it. Employment Relations Laws 1999 is responsible for establishing a variety of rights in the workplace, including trade union recognition, derecognition, and industrial activities. Then maternity and parental leave regulations 1999. Among other things, regulations 1999 are a piece of statutory legislation that govern the right of employee to take time off work for part-time workers. This legislation is aimed at preventing less favorable treatment. A features of the United Kingdom's labor legislation is known as Regulations 2000 mandates that companies must provide employees on part-time contracts with the same level of treatment as those on full-time contracts who perform the same responsibilities. Any questions so far? Okay, so the transfer of undertaking protection of employment regulation 2006 are designed to safeguard the right of current employees as well as any employment contracts for promises that may be in place during the process of a company undergoing a business transfer. One of the acts that prevents discriminations in the workplace and throughout the recruitment process is Equality Act 2010, which was passed in 2010. This document specifies protected qualities that cannot be used as a basis for any decisions made in the workplace unless the decision in question it is to make appropriate accommodations to accommodate the protected characteristics in the workplace. One piece of law the forbids discriminations against individuals who are employed by employment agencies is the Agency Workplace Regulations 2010, which was enacted in 2010 when compared to full-time workers who perform the same tasks, they should be treated in the same manners with regards to compensations and working hours. Consumer Acts 1974 and 2006 relating to Consumer Credit Act in order to obtain a license from the Office of Fair uh, trading businesses that provide consumer with goods or services on credit or lend money to them are required to be licensed. It is possible for the borrowers to settle a regulated consumer credit agreement early by providing the lender with notice and paying the amount that is due less a rebate. The seller establishes rules that require information to be provided to borrowers or hire before to entering into consumer credit or hire arrangement. Engaging in commercial activities without a license or authorization is criminal uh, act that can be lead a monetary penalty and or imprisonment. It is also the borrower's right to get information regarding the amount that is required to settle the loan. Any questions so far? Consumer Right Acts 2015 uh, brought about a number of changes to consumers law regarding the purchase of goods, definition of unfair conditions, and the incorporation of digital content. The modifications are as follow. If you can see here, what should be done in the event that they are defective. Uh, what happens when a firm is functioning in a manner that is not competitive? What are the consequences of unfair terms in contract? What are the consequences of public enforce having to give written notice to routine inspections? Examples of public enforce including traded standards. Uh, there should be a wider degree of flexibility for public enforce or respond to violations of consumer law, such as ability to seek remedy for consumers who have fallen victim to injury. Late payment of commercial debts Interest Act 1998. This act allows businesses to change other business customers' interest on overdue amount. Interest can be charged 30 days after the goods are supplied or the services is completed, 30 days after receipts of invoice or the customer is told the amount due is payable. After the agreed date of payment, the statutory interest rate chargeable is Bank of England based rate plus 8%. The interest is based on the VAT inclusive amount and calculated as a simple interest rate. Uh, Descriptions Act 1968. Uh, Businesses or salesperson who sell or products or services based on misinformation are considered to be in violation of the Trade Descriptions Act of 1968, which made it a criminal offense. As a result of the act, they were required to be more accurate about their services to products and to refrain from intentionally misleading customers into spending their money on a claim that cannot be verified. Contracts are regulated by the Unfair Contract Terms Act 1977, which places restrictions on the extent to which one party can escape liability by employing in exclusion provisions such as disclaimers, notifications that would bring into existence contractual obligations are included in the scope of this provision, which applies to exclusions clauses found in the vast majority of contracts. Any questions so far, if anyone listening me or anyone's there? Okay, unfair terms in consumer contracts regulations 1998 is an old UK statutory instrument which had implement the European Unfair Consumer Contract Terms Directive 1993/13 EC into domestic law in replaced an earlier version of similar regulations and overlap considerably with the Unfair Contract Terms 1977. So here are some examples of unfair contract terms allowed to trade to unilaterally change the characteristics of the goods, services without good reason. Terms that allow the trader to keep an unreasonable amount of money as compensation if the consumer doesn't keep to their side of the bargain. Terms that aim to take away the consumer's legal right. Analysis the advantage and disadvantages of partnership becoming a limited company or facilitate growth. Uh, in the United Kingdom, a partnership firm is considered to be one of the most prevalent choices for conducting commercial operations. There are currently several hundred partnerships in operations. By utilizing the business of partnership model, it is possible to enter into business relationship with another individual without the perceived formality that is associated with a limited company. So according to a perspective that is less optimistic, when you have a partnership business, you are losing control of the path that your organizations is going uh, in without putting proper protection structures in place. Any questions so far, if anyone is there? Okay, so there are some advantages and disadvantages of business partnership. Uh, if you look at advantages, less formal with fewer legal obligations, owners and control are combined, easy to started sharing the bundle, access to knowledge, better decision making, within multiple minds working together, decisions can be more, thought out and well rounded. When we look at disadvantages, the business has no independence, legal status, unlimited liability, limited access to capital, potential for differences and conflict, profit must be shared, and taxations. So taxation means the way the business is taxed can be less favorable compared to other structures. Public limited company. Among the various type and sizes of businesses that may be found in the United Kingdom, a limited company is one of the most common legal forms. Uh, One reason for this is because it provides a multitude of professional and financial advantages, all of which are far superior to those that are accessible to sole proprietors or contractors who operate under an umbrella business. There are some advantages and disadvantages as well. Limited liability. This means that his company faces financial problems. The personal assets and finance of shareholders are protected. They won't lose more than the value of their shares. Tax efficiency. Limited companies offer more opportunities and flexibility in terms of how profit and personal income are taxed. This can result in potential tax saving. Professional status. Operating as limited company creates a professional and corporate image. This can enhance the business reputation and overall value. Also, there are some disadvantages of private limited company. Incorporation requirement, you need to officially register the company with the company house, which involves some paperwork and process, a high setup cost. There are more expenses involved in setting up a limited company compared to other business structures. Director eligibility, you can't be a director if you are disqualified or discharged, bankrupt. Name restrictions, there are rules and restrictions regarding the choice of the company name. Public disclosure, information about the company and its owner is displayed publicly. This lack of privacy is a drawback. Complex administrations, limited companies have more complex and time consuming accounting and administrative requirements. A higher accountancy cost, professional accountant might be needed, leading to higher accounting expenses. And finally, challenges. Taking money out of the company can be more difficult and is subject to certain rules and regulations. That's it for today. There are some reference for, and also you can go here and visit for further information. That's it. Also, you can have some books or material on your Moodle or learning management system. That's it for today. If there is any issues, concerns, or questions, you can drop me an email at yasir@ukversity.co.uk. And thank you very much for joining me today. And I'll see you next Sunday at same time. So thanks everyone. Have a good weekend ahead and bye for now.